Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 23rd of March. All right, now let me sort of try and help you make odds and ends of what's going on in the market. Now, you've seen a lot of things, equity markets rallying. Okay, nice kick off the bottom there. Bitcoin's not really sort of going too far just at the moment. We've got, if I just scroll that across, gold really consolidating around 1920. And you've seen a bit of a recovery there in oil after a breakdown through 100 right now. The Russian-Ukraine issue continues. What's going on there? The key thing here is if you look at the dollar index, the dollar index hasn't gone anywhere, right? The dollar isn't doing anything, but there's other things happening in the market. Now, you can see euro pretty much not too dissimilar to what's going on in the dollar index. The VIX, okay, lower. The market's comfortable with all the risk at the moment. So you need to sort of work out, if the dollar's not going anywhere, why are things moving around? Well, we've got a bit of a risk on profile here, and it's followed up in the Asian session here with a positive move in the US equity futures. That's should give the euro, sterling, Aussie, Kiwi a boost to the top side. Now, the Aussie hasn't moved far today, but it has been going up. Same with the Kiwi, same with CAD. Now, why is that? Well, the commodities, right? You can connect the dots here. Commodities, and they call the Aussie, Kiwi, and CAD commodity currencies for a reason. They got lots of them, right? So if the commodities overall are rallying, look at the index, it's up 8% for the month, right? That's going to give Aussie, Kiwi, and CAD an underlying bid tone, right? So that's a bit of a positive sentiment. You can see this a little bit clearer. Let me just come over to the currency charts. Get the pen up. Okay, so once again, the dollar index, dollar's not doing too much at all. Euro, okay, the dollar or the US dollar is sort of falling. Sterling's coming back a bit of a relief rally. Aussie's going up and breaking higher with that stronger commodities, and it's coming across onto the Kiwi. You're seeing that move on the CAD as well, right? It's a CAD move, Aussie move, Kiwi move, not US dollar weakness, right? I still think euro so close to obviously with the ECB, what's going on there, but the Russia-Ukraine issue, etc., really still not getting any traction with that, right? So that's exactly where we are. The commodity currencies are in full swing, and that's what's happening just at the moment. So each week, there's usually a shift in sentiment across the board where the direction's coming from. Now, if I come back to the global markets, you come over and have a look at the news. Okay, there's a few things going on, but it's not like massive, right? There's always a bit about oil. Funnily enough, the market has become so desensitized with the Russian-Ukraine issue that it doesn't really get much of an issue. You can see it down here at the bottom, but no massive situations, right? This is the normal evolution of a geopolitical event. Now, if I swing that over to the currency page and look at the news there, you can see here, improved sentiment and high commodity prices help Aussie, hurt yen. They don't have many commodities. So, of course, you sell yen on the back of that. It's like the oil trade, right? They don't have any oil. So that's where that direct impact comes from. So when we look across the board, and then if I switch it over to equities, we'll get the mainstream sort of bits and pieces of what's going on there. Okay, not too dissimilar news to what was on the Forex page, which generally tells you the market doesn't have a lot of news going around at the moment. But if I show you the global equity page, right, you can see here, daily percentage change. We should see a lot of blue, right? Positive sentiment across the board. You see that in the North American session, flows into the Australasians, the Asian equities. Looks like the Kiwi is struggling there. And that should also drift into the European equity markets. Really strong risk on sentiment, right? Is it going to last? Well, I don't know about that, but you work with what's in front of you. If you can't work with that and work out what's going on across the board, and if I just come over here to the cryptos, give you a look at there. As I said, there's not a lot of action at the moment in the crypto space. There hasn't been any sort of significant tweets or updates from any of the major stakeholders. So what we have in that situation is the markets are somewhat subdued, just sort of waiting for that next impulsive reaction. In the meantime, we do have a good support level building up there on Bitcoin alone. All right, so what are we supposed to be looking at? Now, if I come back over here to the global markets, obviously the commodities are a major strong point at the moment. So this should be on your radar, right? If you start to see commodities fall for whatever reason or continue to rally, well, then you know which pairs are going to be running with that, right? So you're getting so that where the Aussie, Kiwi, and CAD are getting a bit more of a boost, they are more commodity currencies, and they're also getting a boost from the risk-on profile from equity markets. So a bit of a double whammy there, right? So with that going on as well, the main thing would be to keep an eye on the fundamental data that's coming out, right? So the key numbers, as I said, big week for sterling. There's a continuation of those numbers coming out. The consumer confidence numbers out of Europe, as well as the new house sales out of the States. Maybe something. I don't think it's really going to impact. Don't forget, we're in the last week of the month, and that's where things get a little bit loose. There are obviously a number of central bank officials speaking this week from multiple central banks. They're out there to sort of calm the peace, let you know they're still doing their job, and there's big stuff coming up, all this sort of crap. We do have some more significant US numbers coming out over the next couple of days, as well as some more UK numbers. And one I like a lot, the IFO numbers, right? You don't get the volatility that you do out of a CPI number, but it used to be a good benchmark for strength and weakness in the German market, which is pretty much the European market, right? And that's where we are, guys. So try and keep it together. Focus on where the activity is and then piece it back to specific instruments. So you could be trading the commodities by themselves or trade the currency pairs related to them, or keep an eye on the equity markets, right? These things have got a life of their own. I had a good question yesterday, like, I'm not used to trading equities. How do I get into it? Well, look at the daily movements in the currencies. I mean, in those instruments, right? How far does it move? And then you can start to gauge around your trade plan around that, right? So if you're not used to trading commodities, have a look, do a bit of research, right? See where everything is, see what's going on, see if you can actually apply some risk management and look for opportunities in those instruments. They all trade technically the same these days, so that's a good thing. So you just need to go and find where the action is and see if it lines up with what you're doing, and go from there. All right, guys, that's it from me. Have a good one. Cheerio.